nominal versus real price. Let's start with one of the most important ideas in investing, the difference between what a price says and what it means. In 1980, gold peaked around $850 per ounce. That sounds tiny compared to $3,500 today, until you adjust for inflation. In today's money, that $850 is closer to about $2,800. That changes the story completely. It means that some of the biggest true peaks in gold happened in 1980 and again in 2011. So when we say today's price breaks records, it may only be slightly surpassing those historic moments once inflation is included. This is why inflation-adjusted thinking is essential. It protects you from being fooled by big numbers. Long-term growth. Now, zoom out even further. Since the end of the gold standard in 1971, gold has grown by roughly 7 to 8% per year in real terms, on average. That doesn't mean it rises smoothly. It doesn't. Gold moves in cycles. It can surge fast, then go quiet for years. But long-term, it has shown an ability to keep up with, and often outpace, inflation. And the reason isn't magic. It's behavioral and systemic. Gold tends to respond when uncertainty rises, when debt expands, when currencies feel weaker, when markets become unstable. It's not an asset designed for quick flipping. It's a stability asset, something people hold when the future feels less predictable. Trust and monetary systems. This brings us to the real engine behind gold: trust. Gold is not just reacting to inflation, it's reacting to confidence in the monetary system. When investors fear that currencies are losing credibility, they look for something outside the system. That's why central banks matter here. When central banks increase gold holdings, they're signaling something important. They want reserves that are not dependent on another country's promises. Confidence drives demand, and demand drives price. So if you want to understand gold, don't only watch inflation, watch trust. Because gold is, in many ways, a mirror. It reflects how safe people feel about money itself.